Hey guys, Mike here. So, oh boy, what a day in the market. And I mean, really on the cues, like, oh boy, look what happened there. And also look what happened on the SPY. Remember, I asked you guys, I said, which one are we going to? 4,200 or 3,900? I said, I think we're going to challenge 4,200 first. And people literally in the comments called me crazy. No way it happens. But it's not your fault. Why? Because you were trying to look at it logically and you're not looking at when a market gets euphoric, when it has this pause idea. Remember, I've talked about this for months now. They're going for the pause. I'll show you the charts over and over and over. The market always goes euphoric before the pause actually happens, trying to anticipate it. Tried to anticipate it the end of last year, failed, right? What happened? Sold off. Here we go again. But here's the crazy thing. I couldn't believe when I saw this today, but here's how time shift, right? Look at this right here, guys. And we'll get into the charts. So some stocks had some crazy runs today, but then we got a lot of data coming out. I want you to understand the Fed obviously is going to be meeting coming up in June, right? Jerome Powell talks tomorrow. So of course, what are they going to be looking at, right? This lag effect of interest rates, right? What have we done so far? Do we need to raise again? Do we not need to raise again? Well, all of a sudden the market says, hold up. Now they're pricing like only a 68% chance of a pause, not 90-something%. And all of a sudden, there's a rate hike on the table of 32%. I even saw somewhere today where this had gone up to like 45, but this is what the current data I have right now. So, of course, what's the Fed looking at, right? They're going, well, wait a minute. We've raised rates really fast. Look what's happening in manufacturing, right? Philadelphia data came out today, and you can tell, I mean, look, we got to pop back up as far as the business outlook survey is concerned. But still, the business outlook survey diffusion index numbers of employees went down, which means, of course, what are people doing? They're still laying people off and stuff. And when you look, obviously it's still down, right? It's down in those areas. The only thing lower than this is 08 and 2020. And so that's something that obviously industrials don't look good, but people are saying, hey, now the market's saying, wait a minute, is it bottoming out and going to start moving back up? We'll have to see. What else? You know, I can see a trend. What's happened since September? You know, obviously you're having more initial jobless claims, right? On the 4-week average moving up, and then more continuous jobless claims. Obviously moving up, kind of stalling out over the last 2 or 3 months here. But they were moving up. It's like, hey, you know, so we're starting to soften unemployment, even though when you look at unemployment, the numbers have gone down. But again, the way they figured it up is ridiculous. Now, then you got the Conference Board of U.S. leading index 10 economic indicators year over year. That is a mouthful. And you can just see, I mean, when it gets to -8 every other time, there's been a recession, right? You don't even have to get to -8 for there to be a recession if you look at this and look at the shaded areas. But again, this is what's happening in the economy. There is a slowdown. There's a slowdown worldwide for that matter. You know, what else are they looking at? Hey, for the first time since 2011, commercial real estate prices actually turned down, right? And you can see on the left there when it turned down last time, it was during the 08 crash and stuff. But you can just see, you know, that right there, it's like, wow. I mean, by the way, that's what inflation does for you folks. I'm sure it's done it for your house. You see how it just went on this, you know, superbolic, like, move up and stuff. And we know this is skewed by what? Office spaces, because apartment complexes are doing really well, right? But office complexes, maybe even warehouse and stuff like that, is just a mess right now, okay? Then you're sitting there looking at this. If you want to know when money started leaving the banks or how high the rates got to go, well, once they got to 3, you know, you see that little, I guess it's blue, I'm colorblind, the deposits line started heading down south, right? Once they got up to around between 4.5, they fell off a cliff, all right? And so, again, because why? There's other alternatives now. The brick and mortar banks don't pay you anything, okay? And so we moved our money out, went into money markets, CDs, treasuries, everything, okay? And of course, what that forced the Fed to do, which we'll talk about in a little bit, it forced them to do QE, even though they won't call it that. But I'm sorry, when banks borrow hundreds and hundreds of billions of dollars, whether you give it to them and they borrow it, it's QE. That's just the way it is. At least that's the way the market perceives it, okay? Because they can loan that money out. Now, what else is the Fed going to be looking at? Well, hey, look at sales. Of course, we're slowing things down because we're looking at nominal versus actually real sales when you take into account inflation, right? Nominal sales look like they're still increasing. You're like, oh, well, look at that right there. And they're stalling out in 2023. But again, going back to 2021, straight up, right? But you look at taking into account inflation from 2022 and now, they ain't doing nothing, right? So, I mean, that's something they're looking at. Okay, yeah, we've done our jobs. Hey, U.S. existing home sales, look, finally driving them down. The year-over-year decline, the median home price was the sharpest since 2012. Good job, Fed. What have they not done though? What are we still doing? We're still partying like it's 1999. You know, delinquencies have barely moved. You know, you got the 30-day up a little bit. You got your 60-day climbing a little bit. I showed you the 90s. They're barely up. And when you look at this overall, when you're going back all the way to '07 here, look, I mean, that right there, it's barely moved. All right. So you just got to kind of keep that in mind when it comes to delinquency and stuff. Right. And this, of course, will not really tick up until we start to see a big tick up in people losing their jobs. Again, you can run credit cards up to the hilt, take out new credit cards, whatever. You know, because remember, the credit card companies, they want you paying the bare minimum, right? They want you paying that, not the full thing off. And so, again, it's not a problem until it's a problem. And it becomes a problem when people lose their freaking jobs. But, you know, guess what else they're doing? I mean, I couldn't believe this when I saw it today. Car sales, auto sales in April were the highest since 2021. This is a big ticket item. And you can look, since June of 2022, they may not be straight up, but that was like a stock chart, right? And what does that trend show? That trend shows me it's going up, which kind of blows my mind. Let me know in the comments what you think about that. I was like, really? Like, man, people just, yeah, I'm telling you, still spending, still got the money. That's just the way it is. Earning interest on all that money. So think about it, if you got 2 or 3 trillion sitting around in treasuries and money markets and everything else, drawing on average between 3 and 4.5%, that is a lot more money, right? What else do you got? And no matter what we want to say about job growth and the unemployment rate and earnings, look, it's at a record low since 1969. We ain't seen an unemployment rate that low. And then look at the change in average hourly earnings, right? It's actually ticking up. And one of our members was nice enough to send this to me. I think he's on vacation somewhere on the West Coast. I believe it was Vegas or something. But, you know, look at this right here, guys. $19 to start to flip burgers. You can earn up to $22.50 to work at a fast food restaurant. And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it and all your support. And if you like this kind of content, think about subscribing. And that's what I was talking about when I was saying the bottom, whatever it is, 15, 20% of earners have seen the biggest increase. Because I don't know what it was, 10 years ago, 5 years ago, whatever it was. It sure as heck. I mean, even in my area, you're talking about in Florida, North Florida, not South Florida. South Florida is way more expensive. North Florida, okay, where Disneyland is not. You're talking about, look at these kids, man. It's a great time to be a teenager. They can make $13 to $15 an hour to flip a burger. It was my first job. Guess what? I got paid $4.25. Okay, they're getting paid $13 to $15 living at home with mommy and daddy. I mean, what are you bringing home, like $200 a week after taxes? If you only work just like 20 hours a week? I was working 48. And you times what I made, I worked 48 hours a week, 6 days a week, and still didn't make what they can bring home right now for 20 hours a week, and they get to stay home with mommy and daddy. I mean, are you kidding me? I'd be kicking my kid out the door to go get a job if he's old enough. You got to be out your mind. It's the best time to do it, especially when you ain't got no bills, right? But that's what inflation does for you, and the fact you can't find help, still can't find help. Now, understand, it's not just this pause narrative that's keeping this market going up. It is liquidity. Whether the Fed and they want to talk about is the Treasury just draining their account like crazy, right? And the fact they let these banks just borrow and borrow and borrow at will, hundreds and hundreds of billions. Where they loan it out, we don't know, right? Or not, but the market sees it as that. They're like, oh, that's liquidity. Right, and it come in and backstopped all these banks, right? That whole panic. When we talked about a black swan event, that would have absolutely been a black swan event, but the Fed came in and stopped it, right? What they do in 2020? The whole government came in and stopped it. So now you're seeing that where they're literally seeing black swan events starting to form and going, no, we'll come in and throw a bunch of money at it. It is what it is, right? And so, and you see the Fed's the balance sheet for the Fed just kind of moving sideways. I guess they stopped rolling it off. It is slowly but surely dribbling back down to where they boosted it $300 billion, right? But again, it's QT, and with the interest rate hikes, even if they do another one, it takes months upon months to even feel any of it, right? And so people know that. The market knows that. And what does the market do? We don't know if it's going to sell back down. We don't know what the economy is going to do if we're going into a recession, but I told you it's an addict, right? What does it love to do? Look at any chart, especially for a recession. They knew we were going to be in a recession. What do they do? They have this last hurrah effort where they run the stock market up as high as they can. And if they're wrong, guess what? It's mostly your money anyway. They just sell and crash the market back down so they can buy it lower. And of course, they'll be shorting all the way down. But, that's how they roll, right? So that's people going, I don't understand NVDA and the Qs and all this stuff. And it's just like, it's gasoline being poured on the fire. And they're like, hey, we're going to run this sucker up. Because what you got is, once a stock like that starts to run, this is Tesla, for example. Remember Tesla back in the day? And how many times do people say, can't go any higher, can't go any higher, can't go any higher, and just kept going and going. Stock split, go, stock split, go. It's because what happens is you get these fund managers, they start to see the stocks going up, and they're like, what's going on over here? And they don't want to miss out, because if they miss out and have to explain to their boss why they missed out on 100, 200% gain, they're fired. So, hey, let's just get in it. Boom, let's go, right? And then all of a sudden you get the pension fund managers like, ooh, what? What's going on over here? So then they start running in. Then you got retail. Of course, we're always the last one going, what? You know, NVIDIA's at 280? Let's go. You know, and then we start buying. So, and that's what you're seeing happening. I'm telling you. And that thing, I mean, if it don't break all-time highs, like set new all-time highs, it'll be stunned at this point in time, you know, because it's the way they're running it up, right? It's going euphoric. And I'm finna show you, like, semiconductors in general. And then, of course, here's this chart I showed you a week or two ago, and I said, where are we going? 4,200 and 3,900, right? In that range. Well, guess what? 4,200 was eclipsed today. And if we go to the chart right here, and you can see that bullish MACD cross at the bottom right there, now you can see it breaking up, and right above it, what do we see? Actually broke the daily expected move, and then ended up having a MACD bullish cross on top of that. Daily RSI is above the 50 now, but not overbought, right? Our hourly is overbought, so expect a slight pullback. But you can see it broke through that daily move right in the last 30 minutes on that last push up. And of course, right above it is going to be that gap fill, which is only like 0.5% away to fill that gap. And of course, when that happens, that is going to put another level in play, right? So right up here, as you can see right there, and that's going to start putting that August target in play, okay? And then when you look at the Qs, what happened? Broke over the key level, the August high right there, which we had talked about. That always, of course, will put its April high in place, and you imagine that right there. And then when you look up here, you'll have your March also going. But again, you know, this one right here is overbought on the daily. It is due for some form of a pullback. I would like to see it come down, retest that upward trend line right there. It's just done multiple times. But we'll see on that one. IWM sitting there trying to finally going to break out since March, that level right there. If it can challenge around that 179, 180 area right there, that's what we're looking at. Seems like small caps are starting to wake up here. Again, I told you about that formation to look for and stuff with the rounding bottom, things like that. You can see it's nowhere near overbought on the daily at all. So this one has plenty of room to run if it can. Again, if it gets above that, then of course we haven't been above 193 in quite a long time. And so, and if we can't seem to get out of the way. And of course, what really pushed it up was like Netflix, a huge stock going for $370 a share. Look at that candle, gapped up almost a 10% day. Look at that candle right there on the daily. I mean, that is amazing. And when you look at the 5 minute, you see the big gap up. Now it left this gap behind. And of course, why is that? Just look at all that volume, by the way. Well, it's because they came out and said the ad tier they were going to be adding has 5 million monthly users. So it's more money, right? And so we'll see if people keep adding on that. I am not one of those people. Put in the comments if you are. Now, semiconductors. I'm going to show you each individual stock so you can see what's happening, right? Big breakout in NVIDIA, and that rising wedge actually a lot of time plays out to the downside, but not this one. It's going euphoric right now, but the whole sector pretty much is, right? You got AMD breaking out, MU breaking out, even Taiwan Semiconductors. Look at this thing. It ain't been doing nothing. It's actually been trending down, broke out as well. And there's some other small ones breaking out. So that's just one of those ones, big money, just keeps piling in. When it will end, I'm not sure. And you can see what happened today with Micron. It's up almost 5%. It's going to get $1.5 billion from Japan for their next-gen chips. So that always helps, and there's always big news there. Now, of course, you know, how long will this rally continue? Who the heck knows, right? I mean, that's because I think most people thought it was ended weeks ago. But understand, this is, I told you, as soon as they start talking about that pause, and it's anticipating the pause, and then liquidity's coming in, and all this stuff's happening. Well, you know, the one thing you got to remember here is, and we're going to have to see how this is going to affect the market. The Treasury's got to rebuild the Treasury account. They've drained it, trying to, you know, keep us afloat, basically, at the government level because they hadn't raised the debt ceiling yet, right? And so, old Janet's been draining that thing down, but they're going to have to sell somewhere. People are talking about like $1 trillion in bonds to try to replenish that account once the debt ceiling issue is behind us. What to see that's going to affect the market because $1 trillion or even anywhere near that is a lot. But also, you know, look what's happening on the VIX and why you eventually, you know, maybe we'll get a pullback too is the VIX. Look at these jaws just open and wide open. The VIX is at 16 right now, right? And usually when the jaws get this wide, we get some form of a pullback, right? But this is also why you see people hedging like crazy and VIX call options, you know, daily open interest going off the charts. I mean, and this goes back to 2018. You can see where we're at right there. And you go back to 2018. So been a while since we've seen people hedging this much, but you see why. I mean, when's the last time you saw the VIX actually at 16 level, right? So definitely in the next 1 to 2 months, we're going to have to see here how some stuff plays out. It's going to be a very interesting 30 to 60 days, especially to see and put in the comments what you think. If the Fed actually does another rate hike, I don't expect another rate hike. Now, don't get me wrong. If I'm on the Fed panel, I'm doing a rate hike. People don't really understand how inflation can absolutely come back to bite us. And so that's where you got to be careful. So, again, got to get it squished and all that good stuff. So let me know what you think down in the comments, guys. You think we're finally getting ready to top out, or are we just going to keep motoring on along and keep going up? So when are they going to finally do a rug pull? That's my big question. So anyway, hope you got something out of it, guys, and I'll see you tomorrow for Friday. Oh, yeah, by the way, remember, it's OPEX tomorrow, so might be dead as a doornail tomorrow. You never know. We'll have to see.